Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 1st, 2025. Happy New Year to everybody. Hope you guys had a good one. The markets were a little off guard on Friday, and it actually kind of messed up some of the software that I follow because when we had this move right here, this is what triggered a buy signal on the software. So even though it was a kind of a early stage, so you do expect these kind of pullbacks, and this is what you typically what you buy, and then eventually it's going to end up in the direction of the slope. And this went a little bit deeper than I was anticipating. I didn't really see this one coming at all, so I got caught off guard. I ended up just able to trade out of it with a minor loss. I think it was like $600, but it was I was really looking for a bounce that was going to kind of hold a little bit, but the Nasdaq, uh, say the big boys that have been pulling everything, your Nvidia, Microsoft, they were all weak, and that's really what brought the S&P down because you had the Dow and the Russell that were actually fairly strong. But the Qs were just dragging down everything. So, and typically the S&P does follow that. So let's take a look at what's going on. Now, if you remember what I said on Monday or in either Tuesday, the morning notes, was that I wouldn't be surprised to see us form some type of range. And then once the range is set, what you do is you buy the lows, you sell the highs, and you keep doing it until there's a breakout. And if it breaks out, then you wait for comeback, a test of support, and you buy that for the move up. Now, if we end up down tomorrow and say we come down and test this the 58.31 area, then what you do is you kind of switch hats on this, and if it comes back up and this is used as resistance, this is where you go short. So we didn't, we don't really have any bullish or bearish divergences right now, and really the best thing we can do is just look at this range. So if it's going to follow it, you can see buyers stepped in each time we were down here. So the bulls are going to have to get it above this, the moving average right here, and that's the 59.07. If they do that, then I'm anticipating we're heading up to the 59.38, possibly even a little bit higher. Remember, we still have this gap up here that I think could get filled before we start any type of sustained move to the downside, if that's what's going to take place. So we're kind of neutral right now because we had these little bounces off the lows here. There's really no advantage as far as momentum. On the 60-minute chart, we are pretty oversold here. And if we would have made new lows here, you can see that we would have had some bullish divergences in place. So if we head down and let's say we test this anywhere from the 58.47 down to the 58.34, and this holds, then what we may be doing is just expanding the range and saying, okay, here's the top and this is the low. So if we come down here, we're definitely going to get some bullish divergences. So I'd be a little cautious jumping short down here, especially if we get a break and then we come back into it, because this is going to be a bear trap if they do that. If we see a takeout of these lows and then we spring back up, you just want to go long because we're probably heading all the way back up to the 60-50 area. So we are oversold, and really that's the short term. This is the range that we're looking at, and on the well, actually, the really short term, we can even say this is that here's the first range right here. So here you can see every time we got up to this level, we came back down. So if the bulls can get above this range right here, and especially get above the 59.07, that's when we look like we're coming up to this level here. Now, if we end up taking out these lows and coming down, then this range is going to expand. And then again, what we're looking for is that once it breaks the range, we want to trade the range. So, you want to be buying down here, selling up here until it fails. And when it fails, that's when you switch, you switch sides and you wait for this to be used as resistance. So that's really about it. I mean, I don't know. I think things are definitely getting a little bit dicey. The Bulls look tired right now, and nothing has really changed with my say longer term view. Not longer term, but just say for the next 3 to 6 months. I think you have to be cautious. You have to put some, cash on the sidelines and wait to put it to work because there's definitely some turbulence that's in the near future. So let's see what plays out tomorrow. I am hoping that 2025 is going to be even better than 2024. And with that, Happy New Year, and I will talk to you guys in the morning.